The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour, and we're looking at the Dow down 389, down, it's at the 32,763 level. The low today so far has been, where did it go to? The low so far today has been, there it goes. Move that a little bit. There it is. 32,682. Now, what's really important about this particular phase right now, that midpoint that I put in here for a little while, I've had this trend line in the middle of the rectangle formation because a rectangle formation can last a lot longer than your patience, especially a narrow one. And most importantly about this is that the support at 32,948, which hit exactly on Wednesday. Saw a lower low yesterday and then a very sharp move to the upside, so that within the context of trying to have a rebound, that was a rebound. Today, bad news comes out with the Fed probably being real worried about inflation, and boom, we've got this move down, and this move down says it's taken out that support. If you're looking at the weekly chart, the level that we're watching is actually 32,000. Let me just check. I think it's the 32,000 right there. 32,000, yes, 573. Let me just lower this a fraction. And that's in the rectangle formation. Actually, let's just talk about this for a moment because we're looking at chart formations. And within chart formations, what I need to do is to show you the patterns that I like to look at. Right here, let's go to that. Oh, there's a lot of action. That's why the mouse is taking its time today. The mouse. Okay, here we go. So I have three core patterns that I look at all the time, besides the rectangles, but the actual directional patterns. Straight up, straight down, cup formation. That could be a V-shaped formation, but you're going from one point down and then testing how you can break or hold that previous high or fail. Or the arch formation, which is also like an inverted formation, going from one point up and then back down again. Or a mix of 1 and 2 or 1 and 3. Look, here's 1 and 3. I call this the dreaded H because if you take out that left side low, usually it's at a peak A or a B, and you come down very quick and you take out that left side low. That said, you can go quite a bit lower. And on the upside, it's this reverse Y where you take out that left side high and you can go quite a bit higher. So those are core patterns. Within that framework, I also look at narrow rectangles, wide rectangles, have a whole bunch of it. What I am looking at here is that in the rectangle formation, if after going to a peak D or higher, that's the fourth highest peak, you come back down and you take out the halfway marker, be careful, because not only do you take out, there's a good chance of you taking out the support level, the horizontal lower part of the border of your rectangle, you can go lower. Then what happens, you go lower, then you bounce in just because it happens so quickly, that you go back just because you didn't say goodbye to everybody, and then you start going down much further. If at any point within that rebound, you can go back above the halfway marker, that's a really good sign. So this is a very important moment for sure. Most importantly, what I am looking at here is, within the context of these patterns, look, the S&P, I'll go through this slowly. The S&P, sharply down 60 points at 39.52. Leg C to the downside. It is making the arch formation. Now, I haven't had a chance to do this. I should have taken that opportunity, but I didn't. So what I'm going to do now is going to show you the left side, right side price time match or price symmetry that I look at. Now, I usually go not just to the left side low, I go right a bump up against the Grand Canyon on the left side, right there. And then I join, I get the midpoint, and I go to the right, click, and here we are. So this says my first, if this is going to continue down by, I'm being a little conservative, a little aggressive, I should say, that by the 27th, which is the 27th will be Monday. By Monday, we might be testing the 3,900 level. I don't usually like to be quite that aggressive. I usually stretch it out a little bit more, but it says from Monday, you've got to be careful. That's number one. Number two is if you take out in the week, this is the daily chart. The weekly chart in the middle says if you take out these support levels, that's not good. But the 9 is still way above the 14 in the weekly chart, and that's good. And it says that for the weekly chart to go negative, you probably would have to see a slide underneath 3882-ish. That's 70 points from yes, about 700 down points. The weekly chart is one thing. The monthly chart, we've got still a long way to go. We've got, what is today? Today is the 24th. We've got a whole 2 days. It's a lifetime in a monthly chart. I've seen monthly charts go from horrible to fantastic in the last day or two of the month. So I don't even want to talk about it other than to say right at this very moment, the price is underneath the 9 and the 14. The 9 has not gone green to say that it's above the 14 would be very positive. So far, that's a negative. Weekly chart, still positive. Daily chart is in a sell mode. Looking at the QQQ, 1, 2, 3, here we go. This is the index 100 trading vehicle. And did that have is this still a leg C? 1 penny changes that. 292.56, 292. Oh, what happened? 292.56, 292.55. So this is still a leg C to the downside. And today, the day's young, but so far the 9 has just crossed negative, and it's underneath the 200 period moving average, and that's saying, not good action on the QQQs. Key support will be at 280, I'd say 287 on the very short term, 285 moving out a little bit further. Looking at the IWM, the Russell 2000, here we go, sitting on the 200 period moving average. Technically, yesterday the IWM went negative, the 9 went under the 14. The weekly chart is still very positive, and the monthly chart, I don't want to talk about that just yet because it's still got another 2.5 sessions to go, but it's not acting very well. But the daily chart really was doing, it looks like a pennant formation, but most importantly, you've got your expanding cone, declining cone, I call it the falling axe formation, and that just says, so far, that 186 support is really important. You take it out, there's a good chance it can go quickly to the low that was made right there. That was 185 to 183. So I'm watching this very closely. All right, here we go. Gold. Gold down, not too bad. It's down 8 at 18.19, but it is down sharply with the 9-period moving average weeks ago having crossed negative. This is it's funny. I had the DZZ the day, 2 days, the day before the high was made. The DZZ is a horrible vehicle. It is the DB Gold Double Short ETN. Look at this. It has, even with gold tumbling today, it has 4,000. It's about 4,700. But look at this. Even at the bottom, when it made the low at 2.39 on the 1st of February, we were in the day before. It's at a volume of 23,000. You almost have to book an appointment. But in fact, if you've got the trend right, it doesn't really matter. But we did not go back into it, and it's done very nicely since then. 2.80, up 0.06.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So I was talking about this DZZ, the DB Gold Double Short ETN. As I say, it's a lousy vehicle, but it is a vehicle. And I had it for subscribers. I was one day early, and we got taken out, and here it is. We were in at about, I think it was I can't remember offhand. Two, right there. I think it was 246, and we just got taken out, and then boom, there it is. It's not a big deal. 277. There's still, I mean, gold is going to go much lower, then the dollar should go much higher, but it's just a horrible vehicle. Anyway, so let's just go on. I want you to look at the silver. Look at the silver. Silver was suddenly leading gold. And I thought, oh, okay, we're going to watch this closely. And then my rule of thumb is that silver very often leads gold. Gold turns around and says, hey, where's my buddy? What happened? And quickly tries to catch up. Finally catches up. Just as it's catching up, silver's already gone sideways or maybe pulling back. And then both of them come tumbling down together. As gold sort of confirms that rally, and everybody gets really bullish on the gold and silver, boom, and the rug gets pulled. And we've got a weekly now sell mode. In other words, the silver and gold now are in sell modes in their weekly charts. So I'm putting a down arrow, even though it's Friday. We have to wait for 4 o'clock. It's the fourth week below the 14-period moving average. Next week, if it's weak, then the 9-period will cross negative. But I'm anticipating that by saying that technically, on a purely technical basis, I'm going to a sell mode in the silver. That doesn't mean to say you couldn't change at any point. Even then, within 2 days, you can do that. But that's not the point. The designation right now is it is looking weak. And look what happened to high-grade copper. High-grade copper had a fabulous run into like Monday or so. And then I said, what's going on here? The market's weak. And this. Anyway, copper is now down 0.08 at 3.97. It's about to take out the rectangle that I'd drawn in as key support. Dreaded H from the peak A to peak B. Remember, that's where you watch the left side low. And I put it in right here. There it is. There's a fight that was going on between the bull and the bear. And now it looks like the bear is about to win. Get rid of the cup formation. Oh, what was I just doing a moment ago? Because there was a very good example of that. I'll get to it in a moment, where you've gone from this very pattern but positively. So now let me just do the next thing. So I want you to look at the dollar. The dollar, we are still long the dollar from 2018 at about 19.07. Via the UUP, watched it go all the way up. We've taken all the profits off on the way up, and then it came all the way down, held our stop, and then it ran back up again. I mean, it came all the way down to 100.82. Look at the way these patterns, look at the symmetry. I call this bar symmetry. From the low that was made at 101.30 on the week of the 3rd of June of 2022, it runs all the way to 114.78 in September. But then look what happens. He gives up everything in the symmetry of the bars. The number of bars on the upside equal exactly the number of bars on the downside. I don't know how that works. It's happened so often. It's such a nice technique to use. Bar symmetry, I call it. Left side, right side price time match. And now you're getting a bounce off that low. And that was a Chapman wave, a green Roman candle at a low, which says if you had to, at any point on a weekly basis, so this is on a daily basis, if you broke the weekly 101.50 support, that would be very negative and say you're probably going to retest the low or take it out. But if you close 2 out of 3 weeks above the high, which is this is the 3rd week, it's really positive. And not only that, the MACD started to improve in the weekly chart. Histogram's improving, but it hasn't crossed positive yet. So all I can say is that the daily's in leg C. It's above the 200-period moving average. It's the first time it's been able to do that. Every other time, it stalls out. The last time was back in early January. It went to touch 105.20s, and then it pulled back. This time, we're at 105.26. We'll see what happens. I want you to go to the USD JPY. This is the yen currency pair. And look, it's also, remember, my rule of thumb has always been that the dollar and the yen invariably go in the same direction. That doesn't mean to say they go in the same proportion, just directionally they're in the same, they follow the same route. But more importantly is that within the context of the independence of each one, I like to look at them independently, and that's really important. Talking about independence and look at them separately. Remember, I like to talk about Bondi, Crudy, Dolly, Goldie, and Vixie. That's bonds, crude oil, the dollar, gold, and the volatility index. Try to think of them separately. Every once in a while, they come together, meaning the counterpoint, like you get in box music, where the counter, one voice goes one way, another voice goes the other way. That happens, but for a long time we haven't had that kind of parallel movement. For instance, when the bonds go up and yields come down, that's usually bullish for the market. We haven't seen that. I'll look at the XLF in a moment. So in this particular instance, we do have the volatility index up 1.65, up 7.5% at 22.79. I'll get to that in a moment. I just want to finish with the currencies. I want to show you something. I was going to do this the other day. In fact, when I was talking to Larry about this, when he interviewed me, when he did Thomas' show the other day, I wanted to say, right there, I was going to say, Larry, one of my techniques is to go to the 4th highest peak, and the 4th highest peak in wheat goes to a peak D very often and then pulls back sharply. And we are right now, I think it was the very day that I got interviewed. I can't remember. Let me just look at that. This is the 14th of Feb. Yep, it was a Tuesday. That was the day. I said, right now I wanted to tell him we're making a leg D. And if this fails, it gets smoothed out. That's why my letters slip a little bit. But that's a peak D. Made our second peak D and the almost exact double top. The double tops and double bottoms has been an unbelievable series of, I don't know if you can call them coincidences, but that's what they are. 811.25 in the continuous contract of wheat on the 30th of December, 811.25. And what does it do on the 14th of February? Goes to 809.75. So 811 to 809. I mean, is that not amazing? It's already plummeted down to the 720s and gone back. And look at the symmetry of the left side, right side price time match. All right. So within that context, even wheat right now is about to test the January left side low. I got onto that only because we were talking about chart patterns. I have to go here to see where was I? Oh, I was talking about the currencies. So here we are. USD JPY. And what do? I haven't had a chance to do this for a little while. I've been so busy with all the other things. But look at this. There's your left side, right side price time match. This is bar symmetry. So I go from there to not the low bar. I go to the bar that is the most obvious that jumps out at me. And that's that. So in other words, this would be difficult to do if I was doing it on a computer, because I'm doing this visually by eye. I've done it so many times, so many hundreds of thousands of times. And this says to me, that is what I would be looking for. Well, it hasn't got there, and it's a little late. I'd have to find another way to look at this. So I'm going to move this over right here to the symmetry, and that goes to that particular candle. It's a particular candle now that I look for. And there it is. It says that the USD JPY should test 138.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Although we're looking at USDY, so it's by March the 1st. That's Larry's webinar is the next week, the 8th, right. So, okay, we're looking at this, and we're looking at the EUR USD. So one of the reasons for subscribers, we've just built up a big cash position. We're just nibbling at some things that I was almost going to lift it and say, don't do it today, because if this particular area starts to weaken, that's your last salvation. But I decide we waited for it. Let's just do it. I don't have to add any second positions, just to start a position. We'll see what happens. So Euro right now is trading down 0.04. And it's at 1.055. It's right on the 200-period exponential moving average. If I was to do the same thing right here, I'd go from this left side low right there to that high that was at a peak G, unusual peak G. But we've had so many Gs lately. GCs that have gone to D, some have not gone to a D. If I have time, I'll talk about that in a moment. But let's just do this. I'm putting this in. It says, yep, by the 3rd of March. It could happen a lot sooner than that. But by the 3rd of March, we should be testing right here, testing the low of the 6th of January of 1.048 in the euro-dollar currency pair. All right, I need to do this. Crude oil is down 53 cents at 74.85. Remember, I've been looking at this and saying these arch formations suggest that this is an incredibly important area between 70 and 72 in the continuous contract, because in the very large arch context, if we take that out, and you've got the rectangle as well, and long rectangles like a narrow rectangle can last a lot longer than your patience. When it finally takes it out, you've got to watch that base, because that just becomes really important. So I'm not very positive on the crude oil. Let's just do the TLT. We've talked about this how many times? Here's your arch formation, bar symmetry, and here I've said that there's a chance, there's just a chance, we don't know yet, that by the 1st of March, we could be retesting the lows that were made at 99.35, and right now we're at 101.47. I'm not sure if that's going to work, but look at the TBT. TBT has made the cup formation, and that said, it's by today. In fact, in this particular instance, it hasn't done it. It made a peak C. It hasn't gone to that requisite leg D yet. So we're looking, I've been saying for a long time, I think bonds are in a range, and they could be fluctuating. And at this particular point, you've got to be really careful, because the TNX, the 10-year, and a lot of the instruments that are important for automobile loans, just all the sorts of things that are really important, are really based on this particular instrument. And here it is, peak A, peak B, leg C. Oh, it looks like it does have to go to a D. So it has to go a little higher. It's gone above the previous D in leg B. That's really important. So this C says it should go to a D. So the 10-year yield is back above that orange line that I said. Just remember, folks, you get very excited about everything, but we've been here many times before. Let me squeeze this close right there. So look, the yields have been much higher. This is the yield itself. Back in 2007, was up at around about 51. That's 5.1%. And it's gone all the way down to 3.98% March of 2020. Now we've just gone back. So it shouldn't cause a crisis, because we have been there. What does cause the crisis is that if there's constant inflationary aspects that the Fed has to worry about, it says you don't know where it's going to stop. That's the whole issue here, is the stopping. You just don't know where. I think I made a mistake. Oh, didn't mean that. You just don't know where it's going to stop. Okay, and this is the, there it is. This is the monthly chart of the yields. All right, a couple of questions came in. I said I'd do the VIX. We've got to do the VIX right now, VIX.X. There we are. So the volatility index, I'd said this whole area here, the reason why I'm a little bit cautious and why we had raised cash, I had all the indications, everything. I had nothing to do other than to flip to negative 3 days ago, because the 9-period moving average 4 days ago went negative. It was an easy thing to do. And for some reason, I saw internal strength, just almost like single-digit stocks that were able to move the markets high enough. So if we got that bounce, I could use the bounce and then go short. Well, we didn't have a chance. It just happened all too quickly. But now you're looking at the volatility index. And look, even under these conditions with the market having, look, the Dow's at 32,685. I mean, we're talking about, it's at a 2,000 point. That's a sharp move from the high that was made just a couple of weeks ago. But what we're looking at here is that the volatility index has gone from the 17s to 22. Percentage-wise, that's very big. But this is the thing that I like to put it into the pie. But the reason is that I say it's only in the pie is that there are so many other factors. Now, why is that not clicking? Oh, there it is. Okay. There are so many factors when it comes to volatility that either do or don't work then I tend to treat it as a separate entity. And like I said, treat the bonds, treat the gold, treat the dollar. They're all separate, because if you look at the way gold moved up, the dollar didn't really tank all them. And when the dollar started to pull back now, the dollar is only now garnering the strength that you would expect. So they haven't worked in synchronicity with the counterpoint. So that's the issue that I'm making here. What I am going to say is that the volatility index, now I'm usually very cautious when it comes to something like an emotional response, because you kind of, all I can say is that it doesn't work exactly. The volatility index should have been much, much higher. And even now, it should be up in the 26s on all the negativity that's out there. But it isn't. So it's telling me that there are buyers out there, and the buyers are showing up to alleviate the tension of the VIX. But now they're not. So that says, I don't want to move this to the right. I can, but I'm not going to do that right now. So this is saying that if this is to continue, and we're going to see much more in the way of nervousness, then at 24, we're at 22.76. Holding in the 24s on any closing basis will see the market go much, much lower. But if at any point, even today, and I don't think it'll happen today, but even today, if the market comes off the low, and instead of the Dow being down 506 and the S&P down, say 70, you can have about a 50% retracement. How the VIX declines is just absolutely essential to monitor, because if the VIX does not and it starts to hold here, it says, aha, for the first time in a while, the big buyers are starting to buy the VIX index as both insurance and as a directional play. Before, they were messing around. Now they're back in play. But if they start leg C today or Monday above 23.63, we're in a different ball game completely. So this is a really important point. And this blue line that I had here, just like I had that line in the TYX, the 10-year yield, to say that's a level that we've been at before. Look how many times we've been here before, and now we're starting to bounce off it. And I had drawn in this ellipsis, this semicircle right here, to say this is a possibility after the H pattern succeeds in not breaking the left side low. Watch out, as you can see. So I'm just saying, be real careful here. There's no heroes of is going to be paid significant. I had a couple of questions. I'm going to go to them right now. We're right back. Two questions. One was the symbol. That was CSTM, and the other one is, I'll find it.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I have a question about ALNY. I believe that's Alnylam Pharmaceuticals. I would just say that some of the micro biocap biotechs themselves are doing fantastically, but some of the big ones like this is not doing well. It's down 5 today at 190. I would just say this left side low right here is going to be important. The low of the week of the 14th of October, the low was 181.65. It's a little way to go there, but in this kind of move, the arch formation, in other words, what we're looking at, if I do a plumb line and say from the plumb line going up to the plumb line, it's been positive. From the midpoint, now it looks like you're in the mirror image on the right side, but going down, I'd say just be real careful. And if I had to do this, it's already taken out left side low. Let's do this. So this is what I would have been looking at right here. I would have immediately drawn in the left side. It doesn't have to, you don't have to talk about notations. I would have just drawn in this to the midpoint. The left side, H, goes to an M pattern. The right side says right here. Where does it go to? Always, I can't even look at the right side until I change that to green on the way up. And look what happened. It came in late, but it broke that left side support level, and now it's going for this one right here. It's taken that out. It's going for this one. I would just have to wait. So yes, it's a fantastic, I know it's a fantastic company, but it has really big volatility. It's huge. I mean, it can drop 100 points just like that in a couple of months. So this has to be right. But you can see there's a beautiful, just treat it as a directional symbol of simplicity. It's an arch formation. That's it. Wait for it to find some support. Next question I had was yesterday, and we looked at it, CSTM. CSTM. Oh no, did I type in that wrong? Yes, there it is. CSTM is Constellium. I believe that's the name. It's hard to see. Yeah, Constellium. And I remember seeing the name about 3-4 days ago. I guess there was a news and it popped up and it went on the ticker. And I thought, wow, when you mix up names like that, it's something. So it's really like Constellation. It's very hard to remember it. Constellium. Anyway, Constellium it is. And Constellium is trading at 16.58. I would just say that this spike in the daily chart to this F/B has all the ingredients to me of a right arm extension. You know, I talk about the rogue wave where you see the sign at the beach that says at 12:06 there should be a high tide, and you're there at 12, and at 12:06 you're walking to your favorite rock right at the edge of the water. You got your suntan lotion, you got your sandwich, you got your everything there, you got your blankie, and you got your suntan lotion on. There it is. You got your dark glasses, and then splash out of the blue at 12:06 or 12:07. There's this big wave, and you look around, you wipe your glasses, and the tide's going out. You don't know where it came from. Well, there was that one wave that didn't see the sign at the beach. That's a rogue wave. But when it is 2 moves up, it's actually with the technicals concurring, That's what I call a right arm extension. You know, like the sign when you ask your teacher, can I leave the room? That's in the old days. We used to raise our hand to ask a question in school. I wonder if they even think about doing that these days. Anyway, and in any of your chats, you can raise your hand to get the attention of someone. That's really what it looks like. That is a right arm extension. And then what happens is it just as quickly comes down, but it holds much better, as opposed to a rogue wave where the spike goes up just long enough for the shorts to say, I knew I shouldn't have shorted the best thing in the market. And the longs to say, I knew I shouldn't have got out. I'm going to get back in. The shorts I'm going to cover. And that very bar turns around, and within a day, you're looking at the continuation of where it was just a couple of days ago in a bearish position. This is different. This is the right arm extension. So I think it's a really good looking stock. I believe it's an overseas steel company, but it needs a little bit more work. So I'm just saying, hold off. I think you'll have a good opportunity to get it. Just for the moment, I'd be a little bit careful about an entry point. Yeah, you can nibble here to get a feel for it, but that's not really the position. And it is a leg D in the left side, right side price time match. Didn't quite get there to the left side high of CSTM is the symbol, Constellium SE. There it is. The high of the 10th of June, well, the week of the 10th of June was 1757, plunged down to the 9s. And now it's gone back. This is my plumb line right there, the arch high after the low was made. And this is my Chapman wave inside wedge target resistance line. It's kind of run out of steam. This was the week that it should have made that high. Now we'd have to look at moving that line a little further on. So just hold off a little bit. Okay, that's that. Question came, Moz. Moz is Mosaic, the Mosaic company. Where is it? There it is. The Mosaic company, phosphate, fertilizers, had a fabulous move. You see this expanding wedge right here? Well, that expanding wedge has a whole bunch of connotations. I tend to just draw the lines in. I love the fact that it hit this Chapman wave inside track repellent zone right here. Yeah. Oh, there it is. Right there. And it hit and it's there. This is the inside track repellent zone. That becomes green if it starts to break above it. This is pink because every time it should be repelled. And this is it can turn into a diamond. It can turn into all sorts of things. It could become a Chapman wave, a stalk leg formation like this. All I'm going to say is that this is the kind of pattern that says to me, it isn't a short and it isn't a long because it's going to trade within a range, and that you need to give it just a little time to see how it handles the midpoint. Should I put that in? I'll put it in right here. How it handles this midpoint here, because it could now start to come back down. It could break out. Anything could happen. So Mosaic is actually acting very well on the daily chart, considering everything else that happened. It's above the 200 period moving average. The weekly chart has gone to a leg B. The 9 is crossing over positive. So this might be one to consider over the next week or so if it holds steady. This is phosphate, potash phosphate fertilizers. So if that's the case, Valet, which we were looking at the other day for one of our people that want to know about it, I said, don't touch it for now. This is iron ore metals. I'm a little nervous now about the steel companies. Look at the steel's breaking down, the SLX. We're still long U.S. steel. We're still in a positive position, taking nice profits off, small position. But I'm watching this very closely, and that kind of goes with that selenium, whatever it's called, CSTM. CSTM. Look, there. You see? Holding and now starting to pull back. So within that context, I'm going to make let's see. How can I put this? I always talk about rotational corrections. And as far as I'm concerned, in a rectangle, when you get these rotations, for instance, look at this, PAN, PA, and W. I've been grumbling I've been commenting on for about a year and a half. What the heck is going on with the cyber security area? Cyber security, everybody needs it, Why aren't they screaming to new highs? Well, Palo also came out with pretty good news. It's trading down just 3.5 today at 185. That's probably the leader of the week. But if you look at CyberArk.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so I was asked whether or not I'd be able to do something with my e-minis. I've given little bits of advice every once in a while in terms of what the patterns I'm looking at. So look at this, the low that was made in the e-mini, this is the 10-minute chart. Back on at 4 o'clock on the 22nd, ran all the way up. It had a couple of buy modes, went to a peak F right then and pulled back sharply. That was yesterday early morning. Remember, we had got that buy signal. It had a very nice rally for about half an hour, and then boom, came tumbling down to the 39.80, 39.75 level. And that was at about, let's see, it was at 12:20 yesterday. And then it started a beautiful move up and went to a peak D in a V-shaped pattern, fourth highest peak in the Chapman wave. That's where you've got to be careful. And then it made a cup formation overnight. And then it held beautifully. And then all of a sudden, from about midnight, it just started to weaken. And early this morning, it just took a tumble. And look at the matching. Look at this. This time frame here is almost the same as this time frame here, and it tried to rally and it failed. Now we've gone lower. So this is a day that you've got to be careful. I don't want to see a double of the noontime price to the downside, down 500, down, closes down 1,000. I prefer, well, I suppose, hey, get it out the way is much better. than to have it just grinding slow and slowly lower and lower. But what I am looking at here is that there's a chance that, yes, you got that 15-point move in the S&P based on Chapman wave high trend gauge yesterday. I don't know where it is today. Let me have a quick look. I think it's another very high reading. And that just says, yep, that says, yeah, it's quite not as high as yesterday. The day's young, we'll see. But what you want to see, so the three things we're looking at right now for the E-mini, to give you a clue, is for the E-mini to try to find some support above 39 in the 39.40. By 1:30 this afternoon in Larry, so it goes to 39.63 area. If it can hold that after 2:30, that's really good. If it starts to fail,